Well, it is Tuesday, and that means it's time for the Your Money segment. Joining us now is Micah Tipton with Evans Financial. And Micah, we had another name for you last time you were here, but Colin's like right over there, so we're not going to do it.
He's hanging out. Let's not.
He's observing us this time, so we'll move on from that. Today we have a couple of different topics for our viewers. Refinancing your retirement and impact on investments with changes in inflation rates, revised retirement income strategies, all that good stuff. Stuff that I know nothing about, but thankfully you guys know a ton about it.
Yeah, we'll try to cram it in here. We've seen higher interest rates the last couple of years, and that can have a big effect on a few things. One is investment returns. A lot of people are invested in bonds, and knowing what portion of your portfolio is in bonds is important because, as we saw in 22 and 23, when interest rates go up, bond values decrease. Right. So that can have a big effect if you're heavily invested in bonds. So being aware of things like that. Overall stock market volatility, when you think about we're investing our money in companies that also have to borrow money, when they're borrowing at these higher interest rates, that can cut into their profit margin and that can affect their stock price. So, especially these smaller companies that are out there, just understanding how interest rates affect how they make money is important. On the positive side, savings accounts, CDs, other interest-bearing accounts like that, when we have higher rates, people that are invested in those, have money parked in those, they're making more money. So, there's a silver lining with that. Another issue is inflation rates. Well, we see rate increases from the Fed to combat inflation, and inflation can really erode the purchasing power of our retirement accounts. So being aware of what you're spending year to year and understanding how inflation can affect that is very important. The last thing we want is for people to overspend because grocery prices have doubled and gas is up, and at the end of their retirement they've run out of money. But there are some ways to combat that. When you're talking about inflation, real returns is a number that gets thrown around, which is, if you have a 10% return in your investment account, but inflation's up 5%, well, your real return is only 5%. So that can diminish those returns. But there's ways we can push back. Treasury, inflation-protected securities are one way, or certain types of real estate is another way. So we have ways to hedge against that. Income strategies are important in retirement. If you're somebody that has an annuity or has thought about getting one, or other fixed interest type products, these higher interest rates can increase payouts, increase interest crediting methods. So if you want some kind of steady income in retirement, that can be very helpful to lock in something like that while rates are high before we see some of these potential rate decreases in the future.
This is a lot of stuff. And, as for someone like me who might be a little overwhelmed, how do they get a hold of you guys at Evans Financial to get some personalized help?
Yeah, you can find us on the web, www.evansfinancial.com, or shoot us an email at info@evansfinancial.com.
And you can watch us right here every Tuesday at 3 o'clock of the fine folks at Evans Financial. We have Micah calling off screen. He's taking some pictures of us here, so we're having a good time. Micah, we always appreciate your time.
Yeah, appreciate it.